I've been trading full-time for the past 8 years, and in this video, straight to the point, I'm going to share with you guys the most important thing that changed my trading, allowed me to become consistent, allowed me to stop hating myself as a trader, feeling shameful, and most of all, just learning to become stress-free. And that's going to be the law of averages. The law of averages is potentially game theory if you guys have ever played games. For a lot of people who play poker, this is very, very important. But essentially what the law of averages states is that even though we might know that we have a win rate of, let's say, 65%, maybe even 80%, it doesn't mean that we know how the next 10, 15, 20, 30 trades, maybe the next 30 hands of poker, the next 30 flips of a coin, whatever it might be. We have no idea in what sequential order we will be right or wrong. And this is very important to understand because I see people who will come into my trading community or they'll send me scripts of different things that they're back testing and they'll be like, look, I have a 75% win rate here, and they'll do all the back testing and they'll take their portfolio, they'll take all the money they have, they'll throw it into this amazing script, and then they'll lose 3 trades in a row. And then they'll be like, does this work? Or if they're over leveraging, putting 20%, 30%, maybe 40% of their entire positions in options, and those are expiring worthless or close to worthless, then you're lucky if you even have any money left. And this is something you have to think about because let's just even say that we have an 80% win rate, which is phenomenal. Out of 20 trades, you could have 1, 2, 3, 4, 5 losers in a row, right? Which is devastating, absolutely devastating if you're not using proper risk management. And you could follow that up with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. And this is an 80% win rate. 15 trades in a row that are green, 5 in a row that are red. And you might be thinking to yourself, there's no way that that will happen. Probability is very low. Very possible. And the longer that you expand your time horizon, say that realistically you have a 68% win rate, which is still absolutely phenomenal. Most people should be happy with a 50% win rate and a 2-to-1 risk versus reward ratio. And if you guys want to understand more of what that means, take our technical analysis mastery course in the description. It's completely free. And you can also get more of this type of disciplined trading and different types of protocols that you can use when it comes to trading and risk management in our disciplined traders course in the description as well. But even with a 68% win rate, which is phenomenal, we don't know over the next 1,000 trades in what order we're going to win or lose, which is why you should be trading with so little money in every trade that it does not mean shit. Your account should be able to withstand 7 losers in a row in order for you to feel comfortable trading. So if you want to become a better trader and actually become consistent, you have to understand that number 1, losing is okay. Number 2, losing on an Excel spreadsheet is not the same as losing in real life. If you're running your scripts and you're seeing that at one point there was maybe a 30% max drawdown, meaning that over all this, testing that we've done, at worst, our account was down 30%. A lot of people are like, that's really not that big of a deal. But the truth is, like, mentally, how do you feel, right? How do you feel when you're down 30%? Would you still follow my trades? Would you still stick to the plan? Would you still stick to your strategy? Would you think maybe I need to move on to something else? And to be quite honest, that's what tends to happen. And I want to share with you guys actually a funny story. So for those of you who do not know FanDuel, basically they're a online gambling company, which I do not condone gambling. I do not ever play gambling. I don't do any of that. But for this experiment a couple of years ago, I did mess with something. And basically there's I believe it's the martingale or martingale effect that says basically, you bet, let's say $1 in this example. And in this example, we bet the $1, and let's say we lose our next hand, we would bet $2. And you can only do this if you have a success rate of 50%. So for me, I always do this with blackjack. And every single time you lose, you double your bet until you win your money back. Boom. So now we've got all of our money back plus $1. And you do this over and over and over. And the point is that in theory, there's no way you're going to eventually lose 25 hands in a row. But the whole point is if you have infinite money, you can just double into perpetuity, which nobody has infinite money. And table games will not allow you to actually do that. They have a hand maximum because they understand that this is so strong when it comes to game theory. And I'm not telling you guys to follow this, but I am telling you the game theory is so important the casinos fight against it. But in the example that I'm going to explain, in the story I'm going to explain to you, FanDuel was unable to do this. And the reason for that is they had a minimum hand size of 10 cents and they had a maximum hand size of $10,000. This is very important because normally when you go to a casino, you'll see something like maybe a minimum hand of 25 and a max hand of $2,500. And the reason for that is you could only double, aka suffer, maybe 5 to 6 losses in a row. Whereas if I'm minimum betting 10 cents, I could theoretically lose 100 times in a row, which would never happen, and I would finally end up using up that max $10,000. And so what would happen is I was betting and I would be playing blackjack thousands of hands an hour. In my experiment, I started with the 10-cent minimum bet, and I started with actually $50. And this is very important because I could suffer so many losses before I ran out of money. And I did, right? In the beginning, I started losing 5-6 times in a row, but because I kept doubling from 10 cents to 20 cents to 40 to 80, every time I'd lose 5-6 times in a row, right? Finally, I would end up hitting that big win. I'd get all my money back. And what's even better with blackjack, which I don't condone, is that sometimes when I'd really rack up to a big hand, maybe I took a lot of losses and the hand got up to $5. If you hit blackjack on FanDuel, they pay you 3 to 1. So I'd make $15, and that's how I'd get those big, massive hits because my RVR was 3 to 1 instead of 1 to 1. And essentially, I was able to scale this account from $50 up to about $1,000 before I decided that I was going to stop, because the problem with something like that is that eventually you go to zero. If you do eventually lose 20, 30 hands in a row, no matter how much money you've made in your lifetime, it's gone. But in the stock market, we don't have to worry about that because we're not risking in that manner, and we're most certainly not going to double down. But I put this in this video to explain to you guys that betting small and being consistent over time is literally the house's way of making money. So much so that casinos are worried about these, which is why they make it very hard for you with min-max bets. But in the market, how does this actually look? Let's just say we have a day trader, and the day trader currently has $10,000 in a cash account. This means that they could go ahead, and if they wanted to take 10% of their capital and put that into trades every single day, they could go ahead and take about 10 trades per day. But to be quite honest, this is too much still. If I was this person, I would be trading max 3% to absolute max 5%. And the reason for this is we have to be able to withstand the losses over time. The beginning is all about not blowing our account up, building a small amount of consistency so that we can scale from there by building up our capital, and then allowing the law of averages to take care of us over time. And if you guys want to learn this in full, much more risk management strategies, check out our Discord community and our Disciplined Traders course, which is completely free. The link to all of those is in the description. Thank you guys for all the support, and I'll see you next time.